So anyways, no cam. Too bad. So I don't know if you can hear it, but I'm sitting on the beach on Amelia Island, Florida, home of the Concours d'Elegance, Ritz-Carlton. Very beautiful. So I wanted to share this moment with you, except YouTube sucks. So anyways, we're here anyways. Sound clear? Well, I'm actually wearing a mic. I know you can't see, so hang on, guys. This is a crazy setup. So YouTube's changed. Oops. See, I've already messed with it. YouTube has changed the way that this works. So long story short, everything is different. So why don't we just get going? Get that out of the way. Yeah, I can try to add a webcam. Add audio, add image, add media, add scene, add video capture device. I might be able to. Hang on. There we go. So let's see. Okie dokie. It's probably way too big. Put you down there. All right. How about that? So, look. You know what? Maybe I can do it the other way. Bring it back so that you're like this now. Wait. Did I lose you? No. Okay, hang on. I gotta go to this area now. Alright, let's try it this way. Everything's so difficult, huh? Hang on. Everything has to be so difficult. So anyways. So, welcome to my vacation. Oops, hang on. Let's do that. Let's make this smaller. I think I can put this down here. And we'll go. Anyways, cool. So like I said, I never let you guys down. I always bring you with me. And charts should be back. Anyways, so let's get going because it's actually started a little bit of mist coming in. So anyways, I don't think I even have a drawing tool in the setup, so we're just going to have to go with it. These are all our major currencies. So you do see charts. Okay, that's good. So what we're going to do is a quick trip around the world, look at gold and oil, look at dollar and yen, and anything else that happens to be here. So thanks for hanging with me. I don't know if you got the disclaimer. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. And by the way, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. If you are not yet, please visit TradersWay and download MT4. Also, in all my videos, there's a link where you can download all my MT4 charts and templates. I actually did that last night. I downloaded the chart templates to pop it onto this laptop, so I know it works tickety-boo. So anyways, happy birthday, Pharaoh. Cheers to you, mate. Okay. All right, so let's get going. So look where we're starting Aussie yen. The first thing I have in mind is I'm looking at the monthly pivots. That looks really nice. We're kind of out of position on a weekly basis, so what sometimes can happen is we head up before down. But in this case, if I want to be a bear, this is a really good place on a monthly basis. It just kind of shows that it may not start this week. So I don't know if it'll come down and then back up and double top before a drop. But Aussie yen is showing signs of, well, I shouldn't say showing signs of wanting to come down. It's at the proper price to start coming down on the medium term. So let's say for the next week or two. Does that make sense? Beatrice says must be in shorts and shirt and drink in hand. Yeah, but not at 7:30 in the morning. But anyways. Okay, so let's contrast that with Kitty Cat. Okay, not in the same pivot, not even in the reverse. Even if the correlation happened to be inverse, they're not even in the same place. So look at the monthly here. If Aussie yen was at M3, then we should be at M2, but we're above the central. So completely different technicals going on here, right? Completely different technicals. So right off the bat, I'm worried about the congruency. The markets are not the same, so there are different impacts going on. So we know, like, maybe there's an issue with the US dollar right now, maybe there's an issue with oil right now, maybe there's an issue with Japanese yen repatriation. So the repatriation issue would bring Aussie yen down, and it's at the perfect price to start that. However, also remember, if China and the United States do a deal this week, Aussie yen's going to go up, not down. So we got the repatriation will pull Aussie yen down, but any China-U.S. trade deal is going to push the Aussie yen up. So you stay on your toes this week. So I don't see the congruency. So it's like everybody's waiting for something. But anyways, if you're a bull, this is out of position for you. And if you're a bear, your setup is right in here. So the proper place, insert shapes. Where's my shapes? Insert shapes, rectangle. Okay, this is your sell zone. Okay, if you're a bear. WGI, my oh my. You can see last week, about Thursday, was actually our front run, and I'm pretty sure we talked about it. So there was a front run on Thursday, monthly central pivot, which puts us heading north to $62.23 a barrel WTI. Isn't that interesting? So the bullishness continues. On a weekly basis, we could have a little dip and up, but I think what it's going to do is up and then kind of head back down. Pound dollar. Now this is a good setup for a bull, isn't it? We set, this is a Friday front run, by the way. So we did this in the swing trading group, but let me do this again. Shapes, rectangle. Okay, this whole thing here, beautiful, right? So we got a weekly M2, we got a monthly M2. If you're a bull, that's a buy. But of course, we got the whole Brexit stuff going on. A little bit dangerous, right? By the way, can you confirm that you hear me? Looks like we're still live. Okay, I heard a background jong. I wasn't sure if I lost you guys. Okay, good, thank you. I'm going fast. It's cold. It's raining. Nah, I should go slow. Hang on. Hang on. Enjoy it. That crisp, fresh air. Loud and clear. Right on. Alright, so now taking a look at euro dollar. Not the same as pound dollar, but not a whole lot different, right? So you see the monthly M2s down here, weekly M2s there. So a bull can think about it. It's not a good setup quite yet. Bears, however, they do want to sell, and this is a sell zone here. And I think, let's do it this way, get the shape out. Alright, so I think this is up here is a better place to sell than it is for this to buy. I think I'd rather buy it closer to 112 and sell it closer to 113.80. Okay, so we're kind of in there. Is it an NFP play? No. No. Oh, the volume's low? I don't think I can do anything about that. No, it looks like it's max. It's just I'm on a beach, guys, that's all. Yeah, maybe your speaker volume's low. was dark. I got my laptop up, got my coffee. That's beautiful now. I see a whole bunch of pelicans flying by, looking for their din-din. Oh, thank you, Marina. All right, so gold, a lot like euro dollar, a lot like pound dollar, right? We're looking at the weekly M2, monthly M2 setup. So I don't know if you want to be a bull. So what does this all mean? Like, you have to put it into pieces here, right? Bite-sized pieces. If gold is going to bounce and head up, that means dollar's likely to be weak, which means then we probably want to be long pound dollar, right? Now, if this was a Friday front run on the sell side, which again we covered in the swing trading group last week, okay, then we're already in a bearish move, right? Your bears already had their chance on Friday, so I don't know, what can I say? So if this is heading down, if gold's going down, then dollar's going up, and then you probably want to be short euro dollar. Does that make sense? And then, of course, the big question this month, so let me say it, let me just say it. In the next 2 weeks, I would expect another yen strength move for the exact same reason, Japanese yen repatriation. Some of the money needs to move to Japan before April 1st, which is today, or it needs to move after April 1st. So now we're starting that whole after April 1st move. So don't be shocked if in the next 2 weeks you see another big yen move. That means another big stock market move down, risk off sentiment. Maybe they'll blame a deal not being signed between China and the United States. That'll happen around NFP, right? Because I think they're negotiating this week. So if it heads to Friday and it doesn't look like there's going to be a press conference and some sort of deal signed, then boo-hoo, everyone's going to cry. The stock market's going to go down, and everyone's going to blame the China-U.S. trade tensions. But at the end of the day, it just happens every year. You know what I mean? So just be careful. So here's my advice to you. Decide what you want to do now. If you're opening your charts looking for a trade, you've already lost. I'd rather you decide you're a dollar bull or you're a dollar bear, or you're a yen bull or you're a yen bear, or even simpler than that. You're risk on for the next 3 weeks or you're risk off for the next 3 weeks, and look for setups. Okay? In that case, you're just saying, you know, all the yen pairs are coming down this month, let's say, right? Or the reverse of that. You're like, no, all the yen pairs are going up, and then look for setups that confirm or deny that. Okay, so if you believe all the yen pairs are coming down, start looking for good trade plans where you're selling rallies at resistance. Okay, what's up, Ian? I'm at the beach, Amelia Island, Florida. Does that make sense, guys? Like, pick a team, pick a strategy. I mean, I teach this all the time, but I look at the charts this week, and that's what it makes me think. Like, I think it's going to probably go up and down. And if you're not sure what's happening, you're going to lose. Okay, you're just going to lose. What can I say? So remind yourself, you're the expert. Your clients are going to turn to you for your advice, and your advice should be this month, the month of April, based on whatever, Japanese yen repatriation, the final flows of that, or China trade tensions, or whatever it is. Just pure seasonality could be enough. But you've decided that you believe it's risk on or risk off, whatever that is. So if you're like, it's risk off, the yen's probably going to get strong, the dollar's probably going to get strong, the Swiss franc's probably going to get strong. Therefore, you're going to look for opportunities to take advantage of that flow. And it's not going to last forever, right? It's not going to last forever. We're only talking for the next 3 weeks. And then we got to start setting up for the June Fed meeting. And I know it's at that point it's only the end of April, but that's how it works. Okay? Yeah, charts for gold, but it's all the same thing though, right? So for example, if gold is up, right, it's probably a risk-off scenario. So then that tells me what to do with all the Swissy pairs, all the yen pairs, all the dollar pairs, and even gold. Or, I mean, even oil, really. Okay? So that's what I'm saying. Look at your charts, make a decision fundamentally. You don't even have to be right. I mean, that's the whole thing, guys. You don't even have to be right, but you do have to have an opinion. Because if you're not right, you're just not going to get setups, right? You're just not going to get setups. That's all. What's wrong with that? Or you'll get setups. You'll make some money. You won't make a lot of money. Excuse me, because the market just wouldn't agree with you. If you're like risk off and China and the United States do a trade deal, it's going to be a risk on, baby, and the yen pairs are going to skyrocket, and you're going to miss it. But it's better than getting caught in a sideways market and losing money. Because imagine you have to sit down with your clients and they're like, how did it go this month? You're like, well, gee whiz, we actually lost a lot of money. And they're like, really? Because everyone tells me nothing happened. Everyone's complaining the low volatility. And you're like, yeah, nothing happened, but every time I was a bull, it went bearish. And then every time I was a bear, it went bullish. And I just sucked. And I lost a lot of money, right? You don't want to have that conversation, right? Especially if your big investors, your father-in-law. Alex says, I'm under the impression that the Fed won't do anything in June. That's true, but there's a press conference and they're going to talk. Okay? And it's also, to me, the June Fed meeting is the beginning of summer. So you want to trade, like, put it this way, like, let's say you're a big money trader. You want to trade like a madman right up until that June meeting, and then you want to cut loose and head to the Hamptons for 6 weeks of debauchery. Okay? So you're done. You're just like done. Right? And off you go, and you're partying in the Hamptons. And then what? And you come back the third week of August. Or something to that effect, right? So it's just a key turning point, right, Alejandro? So other June meetings are live in the sense that they might change policy. Or in fact, June is a great one for changing policy. But we don't expect that now. But there's going to be a policy update. Okay. Is it a complement to relative strength? NP's in Nantucket. Yeah, quiet in Nantucket. Complement of relative, it's more of correlation than it is relative strength. Okay, a risk on move is more of a correlation. Okay. Brooke says they're going to be bullish and catch the market off guard. Very, very possible, right? So everyone believes they're dovish, but there's not that many people dovish on the board, right? And that's how we got to this place. But I think now they're starting to hear, how do you say it, like, so you have Trump yelling at them all the time, and they got this new guy, Moore or whatever his name is, yelling at them. But they also raised interest rates, and they were super aggressive. And now the economy has come to, like, not a full stop, but it's slowing. So now they're worried that neutral is not, like, they're not over the mark, but the economy, especially with global pressures for the U.S. economy, it's slowed down enough where they believe that the market is growing, the economy is growing, inflation isn't quite growing, but still interest rates are so low, 2% is low, right? So they need to let it sit and catch up. Is really, like, they definitely hit neutral. They really don't want to go more, and I think maybe they want to admit that, or maybe they don't want to admit that. So it really comes down to, that June meeting is where we're going to find out where they are psychologically as a board, and I don't see them admitting they've overhyped, right? So what they probably just want to do, I don't think they want to be bullish either, as Brooke is saying, right? Thinking about it now. So I think they just want to like be strong and say, look, we're neutral. This is where we wanted to be. We don't have inflation. The economy is still growing. If inflation shows up, we're in a good place, right? Because again, I don't see the economy. Um, so I'm in Florida now, right? And I'm looking, the Ritz-Carlton is packed, the restaurants are packed, everything's booming, right? This economy is still booming. So I don't feel like there's a downturn quite yet. Okay? Well, the thing is, Alex, like these terms run hot, for example, that means that they would allow inflation to overshoot, but all of those are old models. Okay, that's old central policy talk. That's what a 70-year-old would talk about. If you're sitting down with your dad and he's talking about back in his day in the 70s and 80s, but we don't live in that world anymore. So there is no red hot let inflation overshoot. We can't create inflation, right? So the United States has no inflation. Europe has no inflation. They have disinflation. Japan hasn't had inflation for 25 years. And we're moving towards that area, right? Right? Like even the Chinese economy, its growth, it's in a catch-up phase, but still its growth has slowed down quite a bit, and the prices are stabilizing. And like, where do you have to go now to get inflation? You have to go to like India and South Africa, right? You have to go to Venezuela. Well, that's a whole different thing. But like the Western developed world, or let's say the OECD countries, have, now that we have international trade, open borders, a world much more filled with capitalism than socialism, right? Because in the 70s there was a lot of socialism still. So the world has moved primarily to capitalism and free trade and open borders, an exchange of specialities. One country makes jumbo jets and the other one makes laptops, and we trade, and everyone's better off. The higher wage countries like the United States get their wages frozen, but the offset of that is there's no inflation, so you don't need a higher wage. So that's why wages are the same for the last 30 years in the United States. But Americans don't need to make more money. Everything costs less. So it's about the same, right? But other countries, they're doing way better than they were doing 30, 40 years ago. Way better in some cases. So there is no inflation. There is no, let inflation run hot. What inflation? And it's actually capitalism working really well. And even the American, central bank and economists are really trying to grapple with this idea, where's the inflation? Where's the inflation? Where's the inflation? It died with socialism. And free trade gets rid of that. At least to some point. Let's say until the poorest countries have all entered into the global market and their wages have caught up to the point where everyone, I don't know, I guess everyone has to rate, but that even doesn't make sense on an economic model. So the way it's going to work is we'll keep finding the cheapest countries to manufacture stuff. So, it was Japan, and then it was South Korea, then it was Taiwan, and then it was China. Next is probably India, and then we're probably going to go somewhere else. And these economies are going to boom, and people are going to be better off. And then we'll get to a point where, I don't know, I think in the next 100 years, energy is going to be free. And then we won't need money anymore. Right? So there's hope. Oh, is it too much now? Yeah, it's getting windy out here. It's beautiful though. Thank you for hanging with me, guys, today. I know that's not ideal, but I'm out here tomorrow, and then I'm going to head home. But it's beautiful. Here, maybe if I do this, right? It's beautiful. It's funny. It's windier, but it's slightly warmer than before. hope you can hear the birds and stuff in the background. I can see the surf. I can see the pelicans and all that kind of stuff. Little sandpipers running around. It is too much. This turned into a weather report, right? You know what? What if I turn? What if I? Yeah, let's see if I can. Hang on. This might be better. I bet you that's going to be better. I'll use my big fat butt as a wind blocker. Yeah, hurricane. No, it's not that windy. No, it's just a cool morning. It is. Yeah, it is. Yeah, it is better. Well, then, let's just call it a day. I'll see you guys tomorrow. Don't forget to subscribe and like and comment and all that kind of stuff. I apologize. It is getting windy though, so we'll call it a day. I'm sorry it's short, but I'm in the middle of vacation with my wife and kids. But I always got my eyes on the market, and so you're my friends too. So you're just on vacation with me. Don't leave a big bar tab though. Cool. So I'll see you guys tomorrow morning. Hopefully it won't be so windy on the beach. Peace on earth. May the pips be with you. May your profits be above average. And please visit TradersWay.com. Open an account today. They're our sponsor. They make this happen. You need to pay it back, okay? Thanks, guys. Cheers.